Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P and the QQQs pushing higher once again, and we did have some very nice broad market performance across the board. Not many major sectors getting left behind in today's action. Now, the focus of today's action was kind of centered around one jobs revision that came out very early this morning, which showed that 911,000 jobs were missing from the economy in terms of net new additions. Those revisions were from April 2024 all the way through April of 2025. And you would have expected the market to come down red because it was not the greatest news ever. However, the markets discounted that news right away, took a slight tumble for the first 5, 10, 15 minutes that the news was released, and then kind of resumed their course, essentially making this jobs revision a non-factor. And at the time, I was live streaming and I was telling my Discord members that it didn't really matter, that this news, by large and by far, was kind of already priced in. We know that several analysts were commenting that these revisions were going to be negative heading into today, and they were very negative to say the least. The most negative, as a matter of fact, that they had been since 2002. The revisions were 50% higher than last year's adjustment, and the largest on record, going back to 2002. On a monthly basis, they suggest average job growth of 76,000 less jobs than initially reported. Now, granted, about 1 million jobs less is about 0.3% of the total population, so not the biggest deal in the world. But it does show one very clear thing, that the Federal Reserve has been somewhat behind, and that was the narrative kind of to go for today, and the moral of the story resulting from today's jobs news. Now, of course, this won't impact the markets immediately, because it has to be notable to you that even though the jobs report came in under the expectation in terms of the revisions of missing almost 900,000 jobs, it's quite impressive that despite this, and in spite of the fact that the Federal Reserve has been keeping interest rates very high since the month of April, that the economy is still moving along at a steady pace. GDP growth is still 3% year over year in terms of the comparisons. Additionally, companies are still reporting very good revenue growth and very good earnings. There is still around 7 million jobs available in the economy right now, and the unemployment rate stays relatively low. As a result, the news is kind of priced in, but what it does lead to is the fact that, well, the Federal Reserve now has no more excuses not to be cutting interest rates, and the markets are pricing that in right now. As you can see from this chart, 93% probability they will cut interest rates next week by 0.25%. Thereafter, the market is projecting a further cut in the month of October, another 0.25, and then a further one in the month of December, another 0.25. We will see if any of those rate cuts are a jumbo rate cut of 0.5%, but as of right now, the market is taking a more muted approach, giving it probabilities of 0.25% in every single one of the next few meetings. So that was the big focus of attention today. We do have other macro catalysts on the horizon for this week. I will remind you, of course, that tomorrow we get the producer inflation numbers, so that should be interesting to look at. And then on Thursday, we get the CPI consumer print for the inflation numbers, respectively. Now, keep in mind, although the CPI print can come in at 2.9%, which is a slight uptick from the 2.7 recorded last month, and would arguably be the fourth month in a row in which we see inflation trending to the upside. Well, the CPI may just not be the best data point to measure inflation anymore. As you guys know, I like to use Trueflation. This metric uses 15 million different products, refreshed on a daily basis, over 30 million different data points individually. So, why you have 15 million products and 30 million data points? Well, several products come in different formats, right? Different sizes or things of that nature. So you have a lot of data points that goes into this, and it's refreshed daily. And as you can see right here, the inflation rate actually across, a more broad basket of items is only 1.99%. And that does include goods, services, housing, and things of that nature as well. So I'm not too worried about the inflation report, but if it comes in hot like this, the market definitely will react to it, and probably to the downside initially. So pay attention. Those are your two biggest volatility catalysts for the rest of the week. In other news today, we also had, well, Apple coming out with their news event in which they released the iPhone 17, some new Apple Watches, and the new suite of AirPods as well. So when we take a look at Apple later on in the video, I'll give a brief rundown of the new iPhone 17. We're not going to go through everything, of course, just give a brief rundown and why I do think that it could be a decent refresh cycle for Apple overall. So in today's video, guys, we're going to take a look at a few things together. Number one, we're going to take a look at our index rundown, of course. No, sorry, prior to that, we have to cover one company earnings, which absolutely went ballistic in the after hours. And that, of course, was Oracle. Oracle up right now almost 28% in the after hours. And that is despite missing on revenue and missing on EPS for the current quarter, but it was all in the guidance. So we'll take a look for about 7 to 10 minutes to Oracle's earnings in a few short moments. Thereafter, we will get into our major technical analysis rundown of the SPY, the QQQs, and all other major sectors. Check on that rotation. Thereafter, we will do the same thing across our big tech name list right here, because several of these names are in decent buying territory, either for short-term swing trades or for long-term positions. So we will do a full breakdown of the big tech list, see where we stand. And to wrap up the video towards the end, we will do a breakdown of the biggest gainers and losers of the day and see if we can find any further opportunities there as well. So it should be a very fun video, guys. Let's jump right into it. So the SPY today up 0.23, the Qs up 0.28%, but all across the board, we had some pretty good rotation. Take a look at the heat map right here. Although Apple was down after its event, I mean, I can pretty much count on both hands and both feet all the times that Apple has come down after one of these presentation days in which it releases new products. At least I can in the past like 3-4 years, ever since the releases have kind of not been well received, kind of stale. And that's largely because Apple's not sharing any major new AI updates. The specs on the new phones are quite attractive. However, everybody wants the AI upgrades. We know that Google has been making phenomenal progress with their Gemini AI product, and people really want to see Apple catch up to this race right now. So sadly, Apple was down 1.5 after their news event, but the rest of big tech performing well. Look at Google and Meta, up over and almost 2% respectively. NVIDIA was doing well today. Broadcom pulling back after its earnings, but it's still up like 8-9%. So they deserve a bit of a pullback. AMD having a good day. And all across the board, big tech was fairly good today. In terms of financials, decent day there as well. The banks and some of the credit card players up higher. Healthcare, not too bad of a day. UNH up almost 9%. We'll take a look at that one at the end of the video. And thereafter, the bottom half of the market here, guys. Consumer defensives, not too bad, but interest rate sensitives, even though with today, the rate cut odds did stay very high, yields having a little bit of an upswing in terms of your 10 and 20-year yields. It's not going to be a straight line down, of course. So today was just a day after about 3-4 days of big sell-off on the yields. Today was a bit of a day of a retracement to the upside. I wouldn't look too much into it. In terms of your one-day relative performance here, Communication services was the best performer on the day. That, of course, was led by Google and Meta right there. And then we had utilities, energy, healthcare, defensives, financials, and technology, and consumer cyclicals not doing too poorly. The only ones that were down, industrials and basic materials. On your 1 week relative, now that the indexes currently stand very close to their all-time highs, we're looking pretty good. Many more sectors are higher than lower. The only ones lower right now are energy, utilities, industrials on a weekly basis. Communication services, Google with their DOJ, right? The Department of Justice ruling, and now Meta carrying the communication services sector higher. And then consumer cyclical and technology. A lot of consumer cyclical names have been recovering ever so slightly, ever so progressively since their tariff fear lows back in April. So nice to see that as well. So before we get into more technical analysis, guys, let us dive directly into the Oracle earnings and ascertain why on earth is this company up so much in the after hours right now. Let me just turn on the after hour candles and you guys will see this. Massive, massive move by Oracle, up almost 28%, $310 per share, looking phenomenal. However, if you take a look at their earnings breakdown right here, you will see that they missed on revenue and also missed on EPS. However, we know that Wall Street is always forward-looking, and we've been having these same issues this entire quarter. You might remember this most recent quarter of earnings, companies were reporting good EPS and revenue, double beats across the board, but a lot of them were going down because the guidance was lackluster. This is definitely not Oracle's problem. Oracle coming out with some absolutely ridiculous guidance for the future. Let's look into it real quick. So here you can see they missed on the revenue estimate and the EPS estimate as well. They even missed on their next quarter guidance for revenue and EPS, coming in roughly slightly under the expectations and or flat for EPS. However, remaining performance obligations, guys, was absolutely ridiculous. They smashed it, obliterated the RPO estimate here by 205%. Look at your RPOs. Just last quarter, they were projecting remaining performance obligations of $138 billion, which is roughly almost 2 years worth of revenue at the current stage. Look at the amount of money that they've amassed in the pipeline moving forward. $455 billion. Nobody was expecting that at all. And also, they raised the revenue guidance for the next 4 years hereafter. Analysts were expecting that by 2029, the company would have roughly $110 billion of recurring revenue from cloud. Now, Oracle's saying, no, that's going to be closer to $150 billion. So when you raise the estimates so much in the longer term future, of course, the stock is going to jump absolutely massively. But revenue, very decent right here. They did have a 12% beat on revenue, or 12% year-over-year gain on revenue, and cloud revenue as well performing very well, 28.6% year-over-year growth right there. The big story though was indeed in your RPOs. So let's move into some more Oracle numbers and show you guys how deeply they smashed these obligations, right? Look at the RPO explosion. It was very streamlined every single one of the last few years and few quarters, and now boom, absolutely massive. This is because Oracle signed a bunch of multi-billion-dollar deals, multi-year deals over the course of the quarter as well. And what this chart shows, guys, that if you thought the AI trade was dead or close to being dead, well, the answer is definitely not. This trade will still be quite prevalent for at least in my opinion, the next 2-3 years. I mean, we've heard from everybody. We've heard from NVIDIA, we've heard from AMD, we've heard from Oracle right now at this point, we've heard from Broadcom, we've heard from some other of the plays like CoreWeave or NBIS or companies like Iris Energy. There's just so much demand for these data center products, these data center plays, and the cloud providers as a whole. Moving on to the earnings right now, Oracle pops 27% on cloud growth projections, even as earnings miss estimates. So let's move into the article real quick. Revenue was up 12%. We already talked about that. Net income was about flat, coming in at $2.93 billion. That's about 19.6% net margins. Not the worst for Oracle. If you take a look at the last few quarters, that's roughly been in line with what they've been delivering. Some quarters are over 20. This one is under 20. Not that bad, but then again, they are outlaying a huge amount of capital for capital expenditures to kind of grow the business into all of this demand. So we'll allow that. Oracle said its RPOs soared to $455 billion, up 359%. During the quarter, OpenAI said it signed an agreement with Oracle to develop 4.5 gigawatts of US data center capacity. Absolutely massive deals, but it does not stop there. Alongside larger cloud providers such as Microsoft, Oracle has been one of the big winners of the AI boom due to its cloud infrastructure business and its access to NVIDIA's GPUs needed for large workloads. The CEO of Oracle said in the statement that the company signed 4 multi-billion-dollar contracts with 3 different customers in the quarter. I mean, I'll leave it up to your imagination who those can be, but if they're that size, you could probably guess. It's probably going to be Microsoft, Amazon, Google, or possibly Meta as well. Some of those players, right? Also in the quarter, Oracle said that the cloud rival Google's Gemini AI models would become available on Oracle's cloud infrastructure. This is one of the big selling points for Oracle, guys, right? They have no favorites. Essentially, within their ecosystem, they will allow access to everybody's AI models overall. And now, just recently approving approving access to Google's Gemini AI. Very strong. In a statement, Larry Ellison, Oracle's co-founder, chairman, and technology chief, said that in October, the company will bring out an Oracle AI database service that will allow for running AI models from OpenAI and other companies atop client data stored in Oracle databases, talking about OpenAI software, talking about Google Geminis, and possibly a lot more as well. So it's kind of like an OpenAI database. Very interesting stuff from Oracle right here. Oracle generated $3.3 billion in revenue from cloud infrastructure. That was up 55% for the year. Oracle runs many different lines of businesses in line with cloud. The infrastructure one is the one that's seeing the most amount of capital right now. That was up 55%, very important for them. According to a statement, Oracle now sees $18 billion in cloud infrastructure revenue in the 2026 fiscal year. That is 77% growth from the $10 billion that we have in 2025. So cloud infrastructure is the big growth driver for this company, but look at this. Look at these forward projections. The company called for the annual sum to reach $32 billion, $73 billion, $114 billion, and then 144 billion over the subsequent 4 years. That is absolutely massive growth for Oracle. Oracle kind of having its NVIDIA moment right now. Absolutely massive, right? From what they currently generate, on a per year basis right now, if you take a look at their revenue per year right now, it's about 57 billion from the entire business. And now we're talking about the next 4 years, it'll be 144 billion, which is absolutely massive. And a lot of that coming only from cloud infrastructure, let alone their other lines of business too. In July, Microsoft said it produced $75 billion in revenue from its Azure cloud infrastructure. Amazon saying that they generated about 112 from their own. So Oracle right now playing a bit of catch up in terms of revenue growth. Obviously, Microsoft and Amazon will not stay still, but Oracle is definitely playing catch up in this race, and they are doing so extremely quickly. CapEx for the new fiscal year will be around $35 billion, representing 65% growth. Now, this has been one of the points of contention for Oracle for a while now, for a lot of people that look at this stock, myself included, is the sheer amount of debt that the company has in order to scale these operations. As you can see, in the most recent quarter, we're currently standing at about $109 billion worth of debt. So of course, they have a lot of very large remaining performance obligations. Their free cash flow has basically been non-existent for the last 3 quarters as they scale these operations. And about 2 months ago, Oracle was additionally seeking to raise more debt capital to fund these operations even more. This is the one point that you can give kind of to the negative aspect of this business is the sheer amount of debt that they have. However, when asked about this on the conference call, the company did say that it was confident that it would be able to outgrow its debt obligation burdens and then pay them down over time. Kind of exactly like what CoreWeave is trying to do right now too, right? Slightly different companies, but they are using debt aggressively to grow. So the question remains, at about $310, where they currently stand in the after hours right now, is Oracle a buy? Well, you might remember me commenting that here, it was a tough purchase. At $310, it's an even more tough purchase, and that is in spite all of the revenue growth. We are actually pricing in. I've really scaled in this revenue and EPS growth for at least the next 2 years to give you guys a good impression of how much are we paying for this growth right now, even though the growth is phenomenal. Well, at $306, you're looking at a 45 forward price to earnings for the end of the year. Obviously, the 2026 price to earnings is going to be lower, but that's why we use the PEG ratio. We can just give an estimate of the EPS growth rate on average for the next couple of years, and then we divide this price to earnings ratio by the growth rate, which gives us a 2.66 PEG. So I don't need to look at 2026 price to earnings or 2027. That is baked into the EPS growth rate and baked into the PEG. 2.66 is, I will admit, still a little bit high. So you're not really getting a good deal on Oracle, and even at 240 before this earnings pop, you still were not getting a good deal. Now, it doesn't mean sometimes on companies where you're not getting a good deal that they can still go up. But it's always important to understand what we're paying for this growth. Free cash flow yield is incredibly low right now, as they basically have no free cash flow for the last 3 quarters. But overall, very decent showing by Oracle. If you ask me whether or not I want to buy this one at $310 per share right now, well, the answer is no. I've been very firm on this. The last chance to dance for Oracle was probably pretty much back here, right? Earlier on in the year, when it was trading around $160, $140. That was when the stock was really interesting. Now at $310, it gives me a bit of pause just in terms of valuation alone. This stock right now, for me at least, remains a hold. If we are shareholders from prior, I don't really see any reason to sell whatsoever. If we are, as a result, it's just a hold. If you're looking to buy into the company, however, I think there might be more attractive prospects rather than Oracle, just in terms of forward price to earnings multiple growth, and in terms of forward price to sales as well. However, fantastic earnings from a very strong company, and a company that's trying to play catch up with some of the largest cloud providers on the planet. So that's everything that I have for you guys for Oracle earnings. Hopefully you enjoyed that. Now let's deep dive into some charts, shall we? So we're going to run through these a little bit quickly because nothing much has changed. But if you take a look at the S&P right now, the daily bulls are still well in control of this chart. Beautiful daily uptrend, and I'll remind you, any move lower looking for a higher low. The line in the sand levels are still around here, 635, which is also into support. Why do they call it the line in the sand? Well, simply because if you lose this, you lose a couple of things. You lose the daily uptrend, of course, and that would just be synonymous with a bit of weekly consolidation too. Good thing the bulls are working with a ton of space, so I do not see any red flags in the market right now. The one key thing that you should be paying attention to is the rotation. As long as you're seeing healthy rotation across sectors, then the markets are in good shape right now in terms of breadth, right? If you take a look at some of the breadth indicators, as a matter of fact, well, you will see that percentage of stocks above their 20-day EMA is currently still above the halfway mark. 57% of all stocks are above their 20-day EMA. But I like to put more emphasis on the longer dated EMAs, right? Percentage of stocks above their 50-day EMA is at a very healthy 61%, and the percentage of stocks right now above their 200-day EMA, arguably the more important gauge of market breadth, is currently still very good at about 60%. 60% is some of the highest reads that we've had all year. So the market definitely is very broad. There is no concentration risks right now. But we do have some volatility concerns on the near-term horizon, such as the producer inflation report tomorrow, such as the CPI, which is going to be coming out on Thursday, and of course, we still have to deal with a bit of an awkward seasonal period right now, whereby September is known to be a negative month in the markets. It hasn't been so far, but of course, we still have about half of the month to go, and then October as well is not known to be one of the strongest months in the market. So if we are looking for any consolidation events, well, you got a couple this week, and then you also obviously have the comments from the Federal Reserve next week. Now, everybody knows that the rate cuts are probably coming next week. What we don't know is how is the Fed's tone going to be when addressing these rate cuts? Are they going to sound nervous? Meaning, are these rate cuts coming from an accommodative stance, whereby the Fed feels that, you know, although they might be a little bit late and although the jobs market is eroding, are they accommodative rate cuts just to ease some pressure off the economy so that we don't start spiraling down? Or are they reactive rate cuts, right? You'll get that from the tone. If they're reactive rate cuts, I'll remind you, the market does not like that. That's the Fed signaling that they're late, and that's the Fed also signaling that they see some big problems on the horizon, and as a result, they are increasing the speed of rate cuts because the damage has already been done. So the tone of Jerome Powell's delivery and how he answers those questions, and of course we get the summary of economic projections, those will be the focus next week. Not so much the fact that we are getting the 0.25% cut, so keep all of that in mind. Moving on to the QQQs right now. QQQs, same concept, beautiful new daily uptrend. Still no new all-time highs, but looking good. The bulls have created a lot of space off these lows. Anything above 560, looking for a new higher low for further trend continuation. The only time you should ever get concerned is if we start revisiting these lows down here. Why? Because it's the closest support that we have since the month of July. It is your daily higher lows, and it does also represent some areas whereby if you lose them, you would also lose the daily and the weekly uptrends at the same time, which would lead to a bit of monthly consolidation. So far, we are not seeing that. However, I do still think that in this market environment right now, it's a phenomenal opportunity, guys, to go shopping for some of your favorite companies, maybe that have been left behind, right? Not companies are trading equally right now. Some are constantly pushing all-time highs. Others, very solid companies, mind you, have pulled back from their July highs, and those might be ones in which you want to focus your attention. Moving on to XLF financials right now. XLF, not too bad, but we know what we dealt with, a bit of a trend loss right here. Lower lows on the chart, equal highs, daily downtrend is underway, which just means financials are in a bit of weekly consolidation. No problem for the bulls, though. It's still a very attractive weekly uptrend right now, looking for a higher low, and you got a nice fallback area. 52 down about $50, not looking too bad at all. You guys know me, my favorite play in the market right now for financials is Visa, but shout out to some of the banks on some pullbacks. If you get Bank of America down here, 48 could be a decent little area. JP Morgan also looks very strong for a nice good old retest of this range and possibly break out a little bit further. So some of the banks look good in terms of patterns and in terms of technicals. Berkshire as well, the good old breakout retest of this level down here, the mid 480s. This level right there with the weekly EMAs, not too bad for some trend continuation as well. There's a few interesting plays in financials across the board. Moving on to healthcare right now. Healthcare up 0.54%. A lot of that had to do with UNH's heavy lifting today. And the bulls finally looking to break out, right? This was a daily downtrend. Nice engulfing move. Consolidation at the top end of the move. And now you're looking for the break. Consolidation not only in the top 25%, of a massive leg higher, which shows the bulls want to maintain strength, but also consolidation above an infamous area that was problematic for the bulls for a while, right? Looking for the weekly bull flag and the weekly expansion as well. Next target for the bulls will remain up here, 145 to 148. Still a fantastic opportunity to be in some healthcare plays. I don't believe you're too late at all at this point in time. We're still trading roughly close to our 50 monthly EMA, which has only been tested 4 times in the last 15 years and has been a good buying opportunity every single time. So it could be looking very good for the breakout right there on healthcare, either names individually or the sector as a whole. Moving into semiconductors right now. So semiconductors, not a bad day. NVIDIA higher, and even in the after hours right now, several semiconductor plays moving higher after Oracle's guidance. Why? Well, because they're going to need a whole lot more chips if they want to fulfill those remaining performance obligations, right? So that being said, semiconductors not too bad, but we know semis have kind of just been stuck, right? Doing a whole lot of nothing for the past month and a half. The bulls have been doing a great job. Got to give it to them, defending this whole 280 low area right there. And now we might just be looking to move back and crack the highs. If today's bullishness from Oracle continues into the pre-market and regular hours tomorrow, you might just be expecting a break of 300, regaining the daily uptrend for the bulls, putting an end to this very awkward sideways consolidation. And that's all it was, right? Sideways consolidation at the top end of a move. A very strong push right there. You might just be looking for expansion. And even if you don't get it, if we move back towards the lows, phenomenal opportunity to be picking up some of your favorite semiconductor stocks, some of which have sold off so far. AMD, ASML, names like, NVIDIA even at a certain point as well. So there's tons of opportunities across semiconductors if you know indeed where to look. Moving on to IWM Russell right now. And shout out to Micron, by the way. Micron was such a phenomenal buy down here, and we reiterated this for a while on the channel. Even down here, I was saying it's coming into the nice level again, kind of last chance to dance, right? Micron back testing its support area almost perfectly, was looking for the monthly higher lows. They got them. And now Micron, 52-week highs. Super strong performance by this player right there, almost up to 140. So moving on to the Russell right now. The Russell down about 0.59%, but that's just because yields had a bit of an uptick here today. You can see that from the 10 and the 20 down there. So the Russell taking a bit of a breather, but we know who's in control of this chart. It is clearly your short and medium-term bulls right now. The daily uptrend is nice, and we are above current support, which is 232 down to 225. Gorgeous weekly uptrend. Just looking for a back test. If you do get the back test because of CPI or something that happens this week, could be an interesting play to accumulate some IWM positions and maybe go for the longer duration play, right? We haven't done anything at all in 4 years. So the Russell is a play that needs an overwhelming bull market to perform in the long term, and also needs a lower than currently available interest rate environment. So that being said, the Russell is a longer dated play, not weekly call options, but maybe something for a longer duration for the eventual expansion of the sector overall. So be patient with it in the event that you do hold this. Moving on to the VIX right now. The VIX doing still absolutely nothing, so no comment here. Not going to spend too much time on it. You guys know the drill. When the VIX is low, well, it's time to go shopping for some leap call options on some of your favorite names that might be significantly off their July highs in a low volatility environment. And then when the VIX pops up higher, that is when you're looking to sell put options. But I'm not going to sit here and predict when the VIX is going to move, right? You have a few volatility catalysts this week, PPI, CPI, and then next week, the Federal Reserve with their commentary on the direction of the economy. Those are the only volatility catalysts. But even if you get a one-day spike, unless you can really bring a consistent fear environment into the markets, it's going to be tough to get more than a one-day spike on the VIX, in my opinion. Moving on to the 10-year yields right now. As you can see right here, they were up 10%, and on the 20-year yields, also up around 0.67%. So honestly, guys, I mean, it's just been straight down for the last 3-4 days. So of course, the bulls are going to try to backtest this area. 422 down to 4.1 on the 10, looking for the backtest and maybe the further drawdown. I like these because we've broken structure, right? Clear weekly downtrend at this point in time on the 10, and on the 20-year yield as well, clear break of structure as well. And these areas, guys, they've been long-standing areas for these charts. So as a result, the TLT is currently starting its breakout, looking very strong right now for continuation of the breakout range. And it might just be a bit choppy, but I think the direction is now clear for your longer-term bonds. The yields will be coming down, especially if the Fed has to cut sooner than anticipated, or rather faster than anticipated. They will be coming down, and if there's no big economic weakness, guys, the bond vigilantes will not be able to keep that risk premium in those yields for a longer period of time, right? The only reason that the yields on the longer term, on the longer side of the curve would be higher than the short side by a lot is in the event that the bond market is calling the bluff, saying the Federal Reserve is cutting rates even when the economy is bullish, and they don't agree with that, right? If the economy is somewhat bearish, well, even slightly bearish, it's going to be really tough for them to hold those premiums because then it'll kind of be moving in line with the market overall. So interesting kind of cause and effect here in terms of the longer dated yields and why they've been lagging a little bit behind these short-term yield counterparts down there. But TLT, I still do believe, is a nice trade. Moving on to gold right now. So gold had a bit of a reversal day here from the top. We knew that it's coming into daily overbought conditions right now, and we knew that the only thing that you need to look out for on gold pretty much is just watch for when they lose the short-term time frames, right? When you start losing the 4-hour uptrend like you just did right now, it might just be time for a bit of daily consolidation, very natural after such a ridiculous move higher. So we'll be looking for the pullback on gold in the event that they do the full breakout retest completion pattern. If we can find it back down here in the 3400s, it could be a very interesting breakout retest for a possible long. We'll kind of study it. No swing trades on gold for me right now, but congratulations to all the bulls who played this breakout. As I was saying yesterday, you should be scaling out of positions right now because you are in short-term overbought conditions, and gold usually does not move like Palantir. Moving on to our crypto names lastly before we get into tech. So Bitcoin still not doing a whole lot, right? We know that the context was a daily downtrend right there. The bulls had a nice engulfing move, as you can see from here, trying to reset the daily uptrend, but getting a bit stopped out here about the 112 mark. So still very choppy on Bitcoin on the daily time frame. The time frame that makes the most sense, in my opinion, is the weekly. This is just a weekly downtrend of consolidation into support highs, 107 down to 100, which is your previous highs from the chart, coming into them right now as well. And this weekly downtrend is also just synonymous with very healthy monthly consolidation too. So I really am a big fan of accumulating more Bitcoin down here in the lower levels and also selling some puts for some juicy premium down there. I think the chart is very clear what they're trying to do right now. Just another leg of consolidation, which might bring you down into the 12 EMA on Bitcoin. So I'm not too nervous about that trade at all. And lastly, Ethereum, right? Which way is Ethereum going to break, guys? I mean, you can make an argument that this is kind of like a bear flag right now, right? Really unwinding most of this most recent push. Consolidation more and more towards the lows. It isn't looking the strongest. You wouldn't be surprised if it breaks either way, though. I'm not trying to call the break. All I'm here to say that the clearest time frame of them all is still the weekly time frame. Beautiful weekly uptrend. And at this point, you're just looking for more consolidation. If you do consolidate more, coming down into 4,000, down to 3,700. And on the monthly time frame, you would see that as well, right? Beautiful push. Just some higher low consolidation is what maybe the bulls need to accumulate more positions, gather a bit more strength down there, and then move for the next leg higher. Whatever you guys want to play is up to you, right? ETHA, ETHE, BMNR, SBET, ETHM. There's so many plays out there. Feel free to use the proxy of your choice. However, all trades should be derived using the main Ethereum chart as your guide. So please keep that in mind. That's everything I had for your market rundown. Now let's jump into some big tech names. Okay, so Apple coming down after the event. So what exactly happened at this event? Well, I thought it was a fairly decent event. I mean, we're all used to Apple now, not really blowing our socks off with the, with the amount of stuff that they give us during these events. But they did show us a few key things right here. So everything Apple announced at the big event, the iPhone Air, which everybody knew was coming, of course, the iPhone 17, the new Apple Watches, and more. I'm not going to be going through the specs of the AirPods. I mean, the AirPods have a bit more battery life. They also redesigned them a little bit. Both the AirPods and the case, not too bad. They also have more active noise cancellation, 2 times more than previously. And something about the AirPods as well is that they will have live translation features, which is arguably the best portion of the Apple release today. I really enjoyed hearing that. In terms of the new AirPods. So that's something fresh and new for Apple. In other news, we have the iPhone Air, which is quite cool in my humble opinion, right? It's going to serve a demographic of people who really want these slim phones. It comes in competition to Samsung's the Galaxy 25 Edge that was released earlier this year in May, which also has a pretty sleek design, very minimalistic design overall, right? And thereafter, guys, in terms of the new functions and features, well, I'm not going to compare every single one of these functions specifications and features amongst each other, because we'd be sitting here for a while. I have to compare the normal 17, the 17 Pro, the Pro Max. I'll just go with the Pro since it's kind of like the middle ground. Well, you would assume it's the middle ground, right? Between the Pro Max and just the normal one and the Air. So here are some of the upgrades, right? You still have the same OLED display, you still have the same refresh rate, 120 hertz. They changed the titanium and glass body to aluminum and glass body, saving some weight potentially, but unfortunately a lot of people they love the titanium finish and they wanted to keep it. Apple going with aluminum. All right, fine. Those are just design cues, right? The new Apple A19 Pro chip, which is fun. The biggest upgrade of them all, in my opinion, guys, is the RAM. 12 gigabytes of RAM instead of 8 gigabytes is a pretty decent upgrade of about 50%. They have that on the Pro Max as well. The camera upgrades are also quite significant, not only in their design, as you can see right here, but front camera right here on the 16 Pro, meaning the one that faces you for FaceTime and stuff like that, 24 megapixels. 2 times the upgrade, very nice. Triple 48 megapixel cameras as well. Dual video recording, meaning you can record both the front and the back of the phone at the same time, which is quite interesting. There's a few apps that can do that already. I have one on my phone as well. However, it's nice to see that Apple integrated these features into their stuff. Improved battery life, I think it's about 16 or 18% better battery life on the Pro and the Pro Max as well, I believe too. A new Apple Wi-Fi chip, of course, some vapor chamber cooling for all those people who complain that the 16 and the 15s and the 14s ran a little bit hot. Some faster charging metrics as well, but the biggest impact, of course, is the redesign and the presence of the brand new model, which is the iPhone 17. Sadly, it was not enough for Apple shareholders today, as the stock just sold off anyways, and that's been kind of a common theme here over the past, I would say, 3 Apple releases like this. I mean, it was a good release, and I do still think that this possibly is going to be one of Apple's best refresh cycles, at least in comparison to the last 3-4 years. Are they lacking in true innovation for their phones? Maybe. Are they behind the AI race? Definitely yes. But at the end of the day, guys, Apple is Apple, right? I'm pretty sure people who buy Apple products, they buy it for the ecosystem. You don't buy it because the specs are better than Samsung. You don't buy it because the specs are better than the Google phones. You don't buy it because the specs are better than the Huawei phones. Arguably, all 3 of those other manufacturers, on a spec-to-spec comparison, you can make an argument that they have the better specs. However, what does it for most people is the ease of use of the Apple ecosystem. That is Apple's true moat. Apple's moat is not the specs of their devices. Not at all, not even close. It is when they get a consumer into their ecosystem, it is excessively hard for a consumer to leave. They make it very easy, and they integrate a ton of features and different services to make you stay within that ecosystem overall. That is the true moat, and that's why at the end of the day, I always say Apple is Apple. They will have 3 billion users worldwide, and it's very tough to get people to switch ecosystems. So that being said, Apple's price action right now after the event, a little bit soft, but we know that the daily bulls are still in control. Very nice chart right here, looking for a new daily high or low. If you start coming back down to the lows of support down here, call it like the under 230, right? 228, 230 area. You're just back testing support. The weekly bulls have a beautiful area of price action right there to kind of base some support trades off of. And if we do revisit these lows, I'm going to be quite simply selling some put options down here in the lower 220s if I can find them. Even if you would engulf this entire move right there, I don't really see a problem. If you zoom out to the larger time frames, you'll clearly see what Apple's trying to do right here. After losing the monthly uptrend and a very poor start to the year, they now have a very nice 618, 70% retracement size going for them, and you'd just be looking for a monthly higher low for further trend continuation. And I'm a big fan of playing Apple short puts around the 12 monthly EMA, so that is exactly where I will be targeting. You might know that I already closed my leap call options almost at the top last week. We bought them all the way down there. Maybe, just maybe, if they give me a revisit of 220, I might explore that trade again. But I was very happy taking my gains because I expected this size of a move in 3-4 months, not only in 1 month. So I was very happy to pull those gains forward. Moving on to AMD right now. AMD up about 2.91%. Fantastic day for AMD, but still in the context of a bit of a daily downturn right now. Should be clear as day, right? So that being said, we are looking for the bulls to recapture a little bit, but above us right now is an area of resistance, 157 up to about 170. The bears cracked this area last week. Now it will be a bit of a resistance range, but on the weekly time frame, I mean, it's quite clear what's going on right now, right? Just a weekly higher low, support stays below 147 to 132. I've been selling the heck out of put contracts into these support lows. I like the weekly retracement size. I like the monthly retracement size as well. And I especially like the valuation down here at 150. It's about a 1.3 peg, which is very, very manageable. Arguably one of the cheapest among the semiconductor players, at least the ones that are growing revenue and EPS at such ridiculous clips over the next few years. So I'm a big fan of two things on AMD right now: leaps, deep 2027 leaps, and also selling some put options down here. And I have been doing both of those things recently. Moving on to Amazon right now. Amazon up 1.02%. Amazon going for the breakout, man. Amazon not so far off new all-time highs. 242 is going to be the mark to beat for the new all-time highs. Very strong price action here. Daily uptrend is very clear as day. In the event you get any movements to the downside, you're looking for a higher low, anything above 222, looking for a new higher low. This would be a reload area for some longs. You might remember me telling everybody to accumulate Amazon shares down here. I was, at least, right? And I also have the leaps. I didn't add to any new leaps, but I've just been holding leaps that we acquired all the way back there. But I was also saying that if I had to choose one of the big tech names for leaps into the future, talking about like the Mag 7, that Amazon was probably my favorite bet currently, right? Because Google had already ran a lot, Apple had already ran a lot. The one that hadn't ran so much was Amazon, especially in relation to the last 5 years. I was a big fan of Amazon. Now it's a little bit late, not gonna lie. Any pullbacks though, you will find me selling some short put options down here in the lower 220s. The valuation is still quite manageable in my opinion for the amount of expansion that Amazon's gonna be having for the next few years. Moving on to Google, another masterful day by Google, 2.5%. And I just wanna congratulate again everybody who was buying Google shares with me back here, and not only back there, but back here as well when this entire drama started. With the DOJ headlines, with the competition headlines coming from some of the large language models like ChatGPT, people saying it was going to kill Google's business, people saying anecdotal evidence of they're no longer using Google Chrome. As a result, they can't possibly fathom how 3 billion other people on the planet are using Google Chrome. Noise, 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 noise. You guys were able to see through it. You guys bought the dips, and now you guys deserve all the gains. So congratulations to you guys. And if you didn't, well, that's okay as well, right? You're probably up fantastically on some other stocks, so congratulations to you as well. But we will celebrate our Google gains. I think we deserve it for the moment. And overall, I mean, the bulls, full control. I will be very honest with you. We are overbought. These moves make me excited as a Google shareholder. But that being said, guys, right? Is it time to just YOLO call options up here? No. Next stop for Google is probably 250 psychological, and any pullback, they have tons of space for a new daily higher low. So we'll take this one day at a time. I'm not chasing Google up here with any size. If you ask me though, if this is the first time, your first day in the stock market, is it a good deal or a good opportunity to buy Google for a long-term portfolio, the next 5 to 10 years? Well, obviously, if you're just new, right, you could have bought it back here. But even if you did see it back there, but you didn't want it, now that you don't have the risk of the DOJ anymore, now that you can possibly understand that their search and advertising business is not really losing much market share to competition and that the numbers are really good, in the event that now you're interested in Google, I wouldn't blame you. The valuation right now is still quite manageable. 25 forward price earnings. My forward price target for Google into 2027 is going to be around $300. However, if you do buy here, you need to buy with the possibility of a DCA being very open because you are picking some overbought levels right now. So buying here with the premise of DCAing on any dips and building a Google position that you would want to hold for the next 5, 10 plus years, that is something that I still can't get behind. I still can get behind at these current valuation metrics. Moving on to Meta right now. Meta up 1.78%. The bulls finally showing up to play ball. Daily downtrend, engulfing move. Will they be able to reset into a new daily uptrend? We will see, but the chart that makes the most sense in my opinion has always been the weekly time frame for Meta. Weekly was always in a weekly uptrend. We did not lose it, right? Got a bit challenging there for a while. They came back and tested the 12 EMA. Was a decent little buying opportunity. I was also commenting on the channel that I did have a swing trade on this pullback on Meta, and that buying shares down there was not the worst proposition in around 760. The valuation is a little bit rich, but Meta has extremely good profit metrics, free cash flow metrics, and revenue and EPS growth for the next few years. So still, Meta up here, is it a good time to add some shares? Yes, but not a full send. It's more like a nibble up here on Meta, but very strong price action. The bulls are still looking quite good. Moving on to Microsoft right now. Microsoft a bit flat on the day, still not able to reverse this daily downtrend that we've been stuck in now for the better part of the last, 5 weeks? So, right, any move higher, looking for a new lower high into possibly further trend correction right here. What you're looking for as a bull on Microsoft, guys, is let the bulls show you where the bottom is. As I've been saying for the longest time, they did not set any support here on the way up. As a result, it's easy for the bears to move through these prices as if it's butter. And that's exactly what they're doing right now. If you want to know when the bottom of this move is, let the bulls show you. Let them recapture the daily uptrend. Until that time, it is just very healthy weekly consolidation, and at the same time, very healthy monthly consolidation too. Now, one price that I will not be able to ignore Microsoft if it comes down into it is in the 460s, test of the prior highs, and also lining up with the 12 EMA, something that Microsoft likes to do. If you go back in history, after big Microsoft rallies, it can come back down and test the 12, and that is the next area where I would be personally interested. That currently stands at about 470, 465. Moving on to Netflix right now. Netflix, another very solid day, 1.5%. The bulls did a great job here the last few weeks of protecting support. 1215 down to roughly 1180. Not too bad. Daily uptrend is still clear as day. New higher low is set right here at about 1231 as they are moving into a new high price right now. In the event you just continue, well, what are the bulls going for here? This is what you need to see on Microsoft. First, right? After 5-6 weeks of decline, wait for the bulls to give you a nice push higher and try and go for the daily uptrend reset. Then you obviously know at this time Netflix did two things at once, right? They reset the daily and they also reset the weekly trends. Sometimes they do one at a time. Here, Netflix did both at the same time. Now you know that this indeed is your low, 1200. So if we have any swing trades, longer dated swing trades, going for big expansion of price here, we have a very easy stop loss area rather than just constantly trying to pick the bottoms, right? So that being said, Netflix looking very good. Weekly uptrend recaptured. Is it a buy here at 1250? You guys know my thoughts on that. No, unless you have a very long time horizon. If you have a very long time horizon, 2030, where the management says it'll be a $1 trillion market cap, that's about a 2x from here. So if you have a very long-term time horizon, it is a nibble. It's not a very huge buy. It's just a nibble right now, right? Moving on to NVIDIA right now. NVIDIA, 1.46% to the upside. NVIDIA trying its best to set a local bottom right here, right? They're trying to set a local bottom, right? So we will see how much of this move can they possibly recapture. No, this is not new lower highs because these are inside candles. So this is one big leg to the downside. And now we're looking for the retracement size. 61% retracement, 70% retracement, then we can talk about the bull's capacity to reset this daily uptrend. Or they could just pull what NVIDIA sometimes does, the pure V-shape. Not too bad though. There is, if you guys wanted to take a bit of an educated guess with the extended move on the after hours right now for NVIDIA, right? Resetting the 1 hour time frame, resetting the 4 hour time frame as well. We can take a bit of a swing trade on NVIDIA. Stop loss would be below here, and the take profit zone is your previous all-time highs. Not too bad at all, going for the either one-step V-shape or the two-step recovery process. It may take a few weeks, but there is a swing trade available here on NVIDIA itself. That being said, it was a phenomenal opportunity during this weakness to be selling puts under the market, and we were just looking for very healthy weekly consolidation. It came down into the 12 EMA. Monthly consolidation, not the biggest, but it did occur at that current stage. And right now at about 170, 175, NVIDIA's forward valuation is not too bad, trading at a 1.71 peg. So very strong numbers from their earnings as well. Moving on to Tesla right now. Tesla only up 0.16%, still battling with resistance. 360 down about 340. So, I mean, the bulls, it looks like they want to go for it, but something always happens with Tesla, right? To where they get rejected. So in my opinion, guys, yes, it is a nice weekly uptrend. It's very choppy as we're into resistance. If you want to see me swing trade this one, one of two things needs to happen. Either we need to come back down to some of these lows where I can build a position at these lows and have a better stop loss, or you got to give me the break to the upside. Give me the breakout, go touch 380, 400, and then backtest this area and prove to me that you want to claim that area of price and use it as support, because it's clearly been resistance for a better part of the last 4 or 5 months. Those are just my thoughts on Tesla right now. Moving on to Palantir. Palantir with a decent day, right? 4%. We were saying, guys, needs to break one way or the other. Very wide range right here. Very wide range. To the downside, 148 break would have been just daily downtrend continuation. If you break here, 162, where they are right now, finally, new uptrend by the bulls. Weekly consolidation is finished. And as a result, if we're looking for some swing trade longs, the stop will go below there. And then you are looking for the breakout towards back to the all-time highs. Not a bad risk to reward trade, but then again, this area was super wide, right? That being said, if Palantir cascades again towards its lows, you will find me selling some put options with good volatility down here. I'm not adding any Palantir shares up here, but a swing trade could be warranted. Just don't go too heavy and just manage your stop loss accordingly and appropriately. Moving on to SOFI next. SOFI flat on the day, but the price action is still very clear. The bulls arguably still in control of this chart, right? With a beautiful breakout, daily downtrend a little bit. The clearest time frame for me, and now the bulls are going for it, of course. Clearest time frame for me was always the weekly, right? Beautiful weekly uptrend right now. Smashed the resistance level, back tested, and now looking like they want to go for the expansion. It was a very important level, guys. Key level right here. The highest from 2021. Not to be ignored. They back tested it once, and that was enough. And now the bulls want to look to play ball again. So accumulating SOFI shares during this consolidation phase, I was a fan of. It was a nibble for me. Not a full send, but it was a nibble. As SOFI right now, currently trading at about a 9 price to sales, which is not too bad. Robinhood is trading at like 20. And a forward peg ratio of 1.61. Not too bad. If you're asking me for my forward target for SOFI in terms of market cap, I think $40 to $45 billion by the end of 2026 into 2027 is not that far-fetched overall, guys. If they keep up these growth rates, at some point in the next 12 to 18 months, I could see this company being worth between 40, 45 billion. That would be, in line with their previous growth historical metrics and things like that if they just keep executing well. And in the event that we continue moving a bit lower here on some consolidation, you will once again find me selling some put options down here. It's been working out well for us the past few weeks at least. Moving on to Uber right now. Let me just check the time of the video. All right, we're not doing too bad today. So moving on to Uber right now. Uber up 1.16%, not too bad at all, reacting nicely from our support range. 93 down to 90. You guys know it was kind of a no action trade for me on Uber. That being said, the clearest time frame of them all is still the weekly time frame right now. Beautiful weekly uptrending chart. They do seem like they want to protect these lows overall, right? But the risk reward on this trade was never the best. The stop loss, even as of yesterday with the breakout, was about $5. The upside target is $100. So it's like a 1-to-1 risk to reward. $5, $6 to the upside, $5 stop loss. Not the best risk to reward profile, right? So that's why I'm not very interested in Uber. It's looking good though for some follow through towards 100. The valuation definitely supports that expansion, as right now arguably it's still kind of cheap. Lower 1 pegs and about a 4% free cash flow yield. Very strong and very good growth numbers here on revenue and EPS for Uber. Very strong growth for monthly active users. We covered their earnings on the channel, the 6th of August, and I really enjoyed what I saw. So the company was not slowing down at all. And I mean, you just have to look at their growth forecasts, right? Look at their EPS for the future. Very strong EPS gains in the next few years. Profitable as heck right now is Uber, and very strong revenue gains as well. I really do not see a company here that is being hindered at all right now by robotaxis or that narrative. Moving on to TSM lastly. TSM, very strong breakout from the highs, guys. 1.5%, was up over 2% on the day. Probably going to be up a lot more tomorrow because of Oracle's earnings. Daily uptrend, clear as day after some very weird, wide, awkward consolidation for TSM on the daily, which I was telling you guys was in all reality just very healthy weekly consolidation. Phenomenal opportunity to be buying the dips, adding to the TSM positions down here, which I did do in my own accounts as well during that entire phase because the valuation was quite low at 230, right? Lower 20s forward multiples and a 1.4 peg. Now looking very strong, guys. The bulls going for the weekly uptrend breakout continuation, and any move lower just looking for a new higher low on TSM for possible further trend continuation. Looking very strong. Congratulations to all the bulls out here. TSM should be having 2 or 3 very strong years still ahead of it. That is everything that I have for you guys for today's market rundown. Hopefully you guys enjoyed. Now let's take a very brief look, I promise. I usually say that and I usually do these for like 20 minutes, but now it'll actually be like 5-6 minutes, only a few names. I'll try to keep this video under an hour. Biggest gainers and losers of the day. All right, so we're gonna start off with the biggest losers, and I'm not gonna go through every single one. We did a lot of these yesterday's. ASTS could possibly be an acquisition for more shares here. I never say it like that. It could be an opportunity to pick up a few more shares here. 34 down to 30 if you are a fan of this company. Don't force yourself to play it, but we are coming down here fairly hot, especially after yesterday, daily oversold conditions. Another way to play this one is playing short puts well under the market, as cheap as you can possibly get. Of course, the Spectrum news yesterday, acquisition from SpaceX, is not doing this company any favors, them and Rocket Lab as well. So keep that in mind when you are looking to build a thesis on this company. BLDR, now these might be some that could be attractive, right? BLDR, for some back tests down here, 130s for some short puts, not a terrible opportunity. This is obviously home construction materials, and I think the home builders will have a very nice 2026 and 2027. Pay attention to the pullbacks. A lot of people have complained that even though I did alert these all the way back there, they feel that they're late. Pay attention. If you get some retracements here on XHB, ITB, some of the names individually, if you want to play them like Lennar or DR Horton or Toll Brothers or things of that nature, whatever your favorite one is. If you ask me my favorite one, it's Toll Brothers, because they cater to the luxury segment, which is a bit more resilient than others. The demand for their products stays very high. In the event you wanted to play the whole home builders index, XHB on a pullback to the weekly EMAs, not bad for some lead call contracts overall, but BLDR, if you want to play this one individually, not too bad for some short puts or just accumulating some positions if this is your preferred home builder narrative play, right? The dollar stores, I'm not really interested at all, so we'll just skip those. Moving on to HIMS right now. HIMS rejecting from resistance, of course, 52 down about 48. I don't mind HIMS at these prices. I was a fan of, when it was lower 40s, I was saying it's not bad, right? We covered them after earnings. It was like a 3.56 peg because their earnings are coming off 0. So the price to earnings is not the best ratio to use for HIMS right now. You would be better suited rather to use probably a price to sales for HIMS. And at 40, it's around a 4. At 48, it's not that much higher. It's about 20% higher, as a matter of fact, right? It's closer to a 5. Around 40, 40 to 30 is kind of the area that I don't mind HIMS. As of right now, it's into resistance, and you guys know the drill. If you get some sharp pullbacks on HIMS, of which there are many, right? I'll be looking to play some short puts down here, as I was in the past few weeks. If I can play some short puts under 40, I'd be attracted to making that opportunity on HIMS right now. If you take a look at other names, I mean, Broadcom, there's not really too much to say here. Just pulling back after earnings. You guys know the drill. Daily bulls are in full control. Might just be like a meta situation. If you do pull back, well, you're probably just going to target these previous highs, right? 317 down to roughly 310, something like that. Nothing really to do here in terms of Broadcom. There's no real actionable levels in terms of some short-term swing trades. Sentinel-1 remains a buy for me. You probably know my impressions on this one right now. I like selling puts down here. Lower 17s, big fan, big support area. Cybersecurity play, of course. Some people asked me about CrowdStrike yesterday. This one is pretty good. It's fairly cheap. We covered their earnings last week after they had them. Take a screenshot if you really want to. But cybersecurity, some of these names, guys, are quite attractive. Adding to some CrowdStrike shares here, not the worst proposition, or even going for a swing trade. Stop loss below the lows here. The bulls are trying, right? You can clearly tell that they're trying to do something here. If you want to make an attempt, stop loss will go down below here, 402. We don't have the full confirmation of the trend change yet, so it's a bit preemptive, but we are coming down nicely. We have come down nicely on the weekly. If you want to make an attempt, right, going back up to the weekly highs for a longer duration swing trade, not talking about a weekly swing trade, a longer duration recapture of the weeklies and eventually the monthly, just higher lows being set, because we did tap into the 12 EMA right here, yeah? So if you're looking for this style of trade, well, you would have to put a stop loss down below there. Why? Because if they break that, it's invalidated, and we will do the full back test of the actual monthly support range down here, talking about roughly 390 down to about 365. So keep that in mind. CrowdStrike, Not looking bad, but Sentinel-1 I do enjoy as well. Those are kind of the only ones that I wanted to touch upon to the downside that kind of come to mind front and center. NBIS, IRN, we covered them yesterday. NBIS, it's very hard to touch this one up here, guys. Very hard, I'm not going to lie, right? They just priced in like the next year and a half worth of growth in one single candle. So it's very tough, right? However, on any pullbacks, I would be a big fan of playing short puts, because this one will be volatile, under 80, trying to get the backtest of this location. If it doesn't happen, no problem. There's tons of other stocks. You really can't use this part of this chart, because that's when it used to be a company that used to trade in the Russian markets, and then they delisted because of the war in Ukraine. Then they relisted under a different name, and this is the most recent chart action, right? So this is actually what you should be looking at. Blue sky breakout territory right now. The valuation is starting to get a little bit rich, not gonna lie, especially after this 50% candle. But if you get a back test, I'd be a big fan of playing one day at a time, guys. Don't chase, don't FOMO, don't do any of that stuff, right? There's so many names in the market right now. One of them was IRN as well. IRN, we were commenting that this one is possibly one that is, it's not left behind, because the valuation, I mean, you know, the valuation at 26 when we covered it after earnings was pretty decent. And I still do believe it still is quite decent at 30. That being said, if you do buy this one here, okay, I want you to internalize the thought that you might have to DCA, right? You shouldn't be full sending here into weekly overbought conditions after phenomenal rally by that whole segment of the market, right? You're well off the EMAs, the bulls are in control, yes, but you guys know, does this buy look early or does it look late? You guys know it looks late. As a result, if we're buying call options, not weekly calls, longer dated calls, right? If we're buying calls, if we're buying shares, here, we have to buy them with the understanding that we will possibly need to DCA. So if I had to start a position on this one, it would be like a 30, 40, 50% start here, and then I would wait. In the event we get some pullbacks, some logical pullbacks, then I would add the other 50%. If it just fully rallies from here, no problem at all. I'm at least in with 50%. But what it will not do is full send a trade all the way up here, guys. It's just not my style. Maybe it's your guys' style, and maybe you enjoy doing that type of stuff. That is completely up to you. If you do that, especially for short-term trades, stop loss should probably be down below here, because then that invalidates the entire daily uptrend breakout. APLD, this one is very interesting, guys. This one is probably next up after NBIS, IRN, and the other data center plays, of course. Shout out to CoreWeave. My favorite ones that I haven't ran so far, probably APLD. Not looking too bad for possible upside continuation, possibly into the $20 level. And then CoreWeave as well, right? CoreWeave starting to come alive a little bit. The bulls are trying to do something. I'm not too sure what, but they're trying to do something. No, I'm just kidding. I do know what. In the after hours right now, we're up to about 105. So what they're trying to do right here is they're trying to reset the daily uptrend. Yeah, give me a reset of the daily uptrend. As a result, weekly consolidation is finished. And then we will look to see how much of this weekly move can we recapture, reset the weekly uptrend, and then eventually confirm that these indeed are the monthly lows, right? These are indeed possibly the monthly lows. And you might just be looking for my thesis that I've been having, even though it's been a bumpy ride so far. I've been accumulating some CoreWeave shares for a longer term play. I have a CoreWeave Leap call debit spread as well, and I have been playing the wheel down here. I think it's been a good area to be playing CoreWeave in. So if I had to pick a couple companies in the data center niche, instead of chasing NBIS or Oracle, or things of that nature, right? Maybe I would split my money between IRN, APLD, and perhaps CoreWeave. That being said, we have a few more to cover here. UNH, strong move, and the thesis has been the same, right? This, I mean, we covered it a few weeks ago after Buffett, right? The back test of this, guys, was probably the easiest money that you could possibly ever make on UNH. 300 down to 275 was the back test area. Looking for the big, sweeping, engulfing move, breakout, retest, and then moving on to the next level, which we are doing right now. In terms of long-term shares, are you late? The answer is no, but you know, it's probably not going to look like Palantir, right? It'll be a slow and methodical recovery with the entire rest of the sector. You guys know which horse I picked in this race. I picked Oscar Health because I thought that it would have the greatest upside in terms of ROI, quick ROI from the bottom. And so far, I mean, that has arguably been the case. UNH, after today's rally, starting to catch up a little bit, looking not too bad. So any shares bought here, you should be buying them with like a 5-year time horizon, because UNH is indeed a good buy, but for a specific type of investor who wants that defensive nature to his portfolio. It pays a nice dividend as well. In terms of It's a very solid business, like in terms of longevity. It has its current problems, and we've covered them many times on the channel. And obviously, Warren Buffett being in the stock helps too in terms of having that floor, right? I think that's pretty much it for the ones that I wanted to cover today. I mean, shout out to Circle as well. Circle, I've been buying some shares down here. I'm not trying to call a bottom. I'm just saying I have been buying shares. I think the target price for Circle into the next 2 years can be a lot higher. We ran after their earnings a bull and base case projections in terms of price per share that they could attain, being fairly conservative with the base case as well, 10 times price to sales for a fast growing company, not egregious, right? Not egregious at all. And that gives us potential upside of 2x by 2027. So I am accumulating some shares and sometimes playing the wheel down here as well in terms of short puts under the market. Not too bad at all. Shout out to a play like SMR as well. SMR, short puts down here, lower 30s. You might find me doing them too. I mean, Affirm as well. We've been going over this one a lot. Affirm for me on any pullbacks for some shares for a thesis into the next like year and a half. Decent valuation around 90. We covered them after earnings. Very decent. Shout out to the Klarna IPO. It'll be happening tomorrow. So maybe any effects from that will be impacting Affirm indirectly speaking. China names remain very strong. Baba going for the massive breakout right here. Phenomenal breakout in price by Baba, but this was fairly obvious when we were covering it previously on the channel, looking for the monthly higher lows and the breakout. You guys know I don't have any of the Chinese names individually. I just have KWeb, and we've been talking about KWeb for a while, so you can't really say that I didn't give you guys a tip, right? I mean, we were buying call options the whole time back here, the whole time. Now finally rewarded. It's coming into our strike. We had the $40 calls for January of 2027. A lot of time left, and I will be holding. But shout out to names like Baidu and JD.com, which have not rallied as much as Baba. They might be where you might want to put a little bit of money for catch-up trades. Not financial advice, just an idea worth possibly exploring. And that's pretty much it. We can obviously cover many more, but I think we've done a good little summary here. So that's everything I had for today's video, guys. Hopefully you guys enjoyed. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing if you're new. We do these every Monday to Friday after the close, except for when I'm traveling like right now, when I do them Monday to Thursday after the close, and then Friday and Saturday are kind of my days to enjoy the holidays. Currently in Taiwan right now, so once again, I do apologize for the videos coming out a bit later than you guys are used to. I wake up very early with the 12-hour time difference. I'm up at like 7 every morning, even on holidays, just to prep the videos, obviously, and then film the videos takes an hour, and then hotel Wi-Fi, the upload speeds, the processing times, and stuff like that, right? So I try to get them out as early as humanly possible, but I appreciate your understanding and patience for the videos. And last but not least, if you have any questions, please feel free to leave them down below. I would love to answer you guys and help you guys out. And that's it for me, guys. Take care. I'll see you in tomorrow's video. Have a good session, and I'm wishing you guys the best in terms of market performance this week. Keep crushing all your trades, and I'll see you right back here on the channel. Take care and peace.